Hello dear traders, in this session we are going to discuss one of the most powerful concepts in trading, that is high liquidity zone trading. Being a trader, when I started my trading journey, I was quite miserable in trading. But then I learned this concept and added this tool into my trading arsenal. Not only my trading improved drastically, but I also got my first breakthrough in trading with these concepts. Before I delve deep into the topic, give me thumbs up and subscribe to my channel. Let's start and let me show you why I called it the most powerful concepts in trading. What we do, we will pull out a crosshair to see from the very upper portion of the chart. Actually, let me first define what is a high liquidity zone. It is the area from where the market got rejected several times, and high liquidity zones are actually like magnets which attract the market toward themselves. These zones are actually like scars where the market will return and react on these zones. So what we will do, first of all, we will pull out the crosshair to see from the upper portion of the chart if the market has got rejected at any area. We will consider it the high liquidity zone. So see from the first area, is it a zone? No. Is it a zone? No. Not this one. Not this one. uh, yes, this area is a zone. Why I call it the zone? Let's see how many touches we are having. 1, 2, 3, 4, 5. Let me take you into the hindsight, into the past data, to show you if there are any touches on the zones. And trust me, I have not seen the past data, the past chart, and not the zone was cherry picked. Let's see. This is another touch. See, even the zone was respected in the past. We are having countless touches on the zone. You can see how the market is reacting on the zone. Not only once or twice, but we are having countless touches on the zone. See? So guys, zones are like beer bellies. Sometimes the market will come close to the zone, and sometimes the market will penetrate the zone deeper. But the important thing is that the probabilities are high that the market will react on the zone. Let me show it first to you guys at this area. Let's say this is a zone. The zone is like beer belly. The market penetrated deeper into the zone and got rejected. We will count this deeper penetration. Now, sometimes the market will come closer to the zone, but it will not touch the zone area. Now, the market broke the zone to the downside. This is how the market will react to these zones. Now the market penetrated deeper into the zone from the lower side. Now it will get rejected from this area. Now the market will come a little closer. This is not actually how the market works, but I am actually what is a zone area. Zone area is similar to this illustration I just drawn on the chart. Like sometimes the market will penetrate deeper, sometimes it will come closer, but we will count both of these touches as the zone area. Now let me take you to the charts again, and some of the viewers will say this zone was cherry picked. So let's see if we are having another zone. Yeah, this one could be, but we can have a better one as we are having less distance with the first zone. So we will try to have a zone which is a little wider to the first one. Yeah, this area we will count it as a zone. Why? Let me show it to you. We are having one touch, second, third, and fourth. And this is what I'm talking about. Look at this point. The market come closer to the zone, but it didn't touch the zone area. But we will still count it in the zone. And look at this point. The market penetrated deeper into the zone. That is why the zone high liquidity zone is called as the bear belly. Let me take you to the past data to show if you are having any extra touches or to see if the market has respected this zone in the past. Yes, look at this point, look at this point here. We are also having countless touches on this zone, too many touches. So yeah, it qualifies as a zone, as a high liquidity zone. This concept of high liquidity zone trading will work on every time frame, but the higher the time frame, the more the market is likely to respect that high liquidity zone. Now let me show you another example on the daily chart. See if we are having any high liquidity zone on the daily chart. We will start from the second zone to come lower to look for the zone area on the daily chart. Mm, is it a zone? It might be, but let's look for a wider one. Is it a zone? Mm, might be. Let's look for yes, this one. Let's draw it. First, first touch we are having at this point. Second touch we are having at this point. This is the third one. This is the fourth one. And see how the market is reacting on this high liquidity zone. Let's look into the past data. Amazing, just amazing. Look at this point. This one, and this is the testimony of how powerful these concepts are. Look how amazingly the market has respected these zones in the past, and similarly the market will respect these zones in the future too. But what we will do, we will not enter the trades directly. Look at this. Look at this point. This is the daily high liquidity zone which I just drawn on the chart. So what we will do, we will not enter in the market the moment the market the price action just reach out to the zone. What we will do, let me show it to you. Let's say this is the zone which I had drawn on the illustration part. The market is approaching the zone, so we will not enter at this area. We will not enter at this area directly. What we will do, we will wait for the market to draw a pin bar at this point, or to draw a bullish engulfing candlestick at this point. Only then we will enter in the market. What we will do, we will place a pending order above the bullish engulfing candlestick or above the pin bar. When these candlesticks are formed on the zone, we will place our stop loss below these candlesticks. And when these candlesticks are formed, what we will do, let's say if we are having another zone, high liquidity zone at this point, we will target this next zone as our profit target. So this is gonna what we will do. And for example, let's say the market broke this zone to the downside. The market is approaching this zone from the lower side. So again at this point, we will do the same as in the buying scenario. We will wait at this point for a pin bar to form or a bearish engulfing candlestick to form. And similar to the previous scenario, we will set a pending order below the pin bar or below the bearish engulfing candlestick. We will place our stop loss above the pin bar and above the bearish engulfing candlestick and above the high liquidity zone. And let's say if you are having a zone at this area, the next zone which is below this one. So what we will do, we will target this zone as our profit target. Let me take you to the chart, to the 4-hour chart. Now look at this candlestick at this point. This is what I am talking about. Look at this candlestick. Let me remove the noise first. Look at this candlestick. This is a pin bar which formed on the high liquidity zone. So what we will do, we will place our stop loss, our pending order, which is the buy pending order, above this pin bar, and we will place our stop loss below this pin bar. Okay, so this way our stop loss is also below the high liquidity zone. And what I just said, we will target the very next zone as our profit target. And see, within one candlestick, our profit target is achieved. Okay, this would be the case if we had entered at this area with a pending order. Another example could be this bullish engulfing candlestick pattern which formed on the high liquidity zone. What we will do, we will place a pending order above the bullish engulfing candlestick We will place our stop loss below this candlestick low, and again we will target the very next zone is our profit target. These examples were for the buying scenarios. Let me show you example of the selling scenarios. Let me remove the noise. Okay, this is a zone, high liquidity zone, and what we saw there formed a bearish engulfing candlestick. What we will do, we will place a pending order. Okay, a pending order below the bearish engulfing candlestick. We will not enter in the market when the bearish engulfing candlestick forms. We will wait. What we will do, we will place a pending order, because uh, there are scenarios where these type of candlestick form on the zones, but still the market reverses and go above the zones, and it will trigger your stop losses. So we will wait for the market to trigger our pending order. This way our stop loss, which will be resting above the high of the bearish engulfing candlestick, will be less likely to get triggered. And what we will do in this scenario, we will target the very next zone, which is this one. We will target this zone as the profit target and see what happens. So this is how we're going to trade this powerful concept of high liquidity zone in the market. Let me take you further on the charts to show you what happened again. This is how the market is respecting the zone again at this point. Touched this zone several times, but didn't go below the zone. And at this point, the market formed this pin bar candlestick. We would have placed our stop loss below the candlestick low and below the zone. We would have set a pending order above the pin bar, and we would have targeted the very next zone as our profit target. See you guys in the next session. Take care.